Happy month of June, investors. I got 4 bangers for you here today. I just poured another $500 into the stock market to buy more dividend stocks that will pay me passive income for years to come. Now, the stock market has been going up a little bit these past couple weeks, but I think this is fool's gold. All these issues that we talked about previously are still issues. I'm talking about inflation, supply chain issues, ridiculous oil prices. The corner gas station next to me was selling gas for $6.30. We also have global conflicts as well as the midterm elections coming up in November. And I'm not gonna call it a comeback, but C-19, it may unfortunately be creeping back into our lives. Yeah, not fun, but one thing I don't have to speculate on is getting paid by these 4 companies. All of these are swans. They're sleep well at night stocks. And even in sideways or down markets, I can expect to get paid by these companies. So let's get started. Make sure you've hit that like button. Make sure you're subscribed as we dive into stock number 1. As safe as it gets, Procter & Gamble. Everyone knows P&G products. They're everywhere on the shelves of stores. We're talking about Tide, Pampers Diapers, Bounty, Charmin, Gillette, Head & Shoulders, Old Spice, Febreze, Swiffer, Crest, Oral-B, and so many more. It's hard to believe this all falls under one company. This is a company that has increased profits during C-19 and now has about a $350 billion market cap. This is a company that can continue to raise its prices to help offset the increased product cost because the products it sells, they are consumer staples. These are essential products that everybody needs to buy. You probably can't go too long without toothpaste or soap, and there's dancing bears on TV telling me how important toilet paper is. Organic sales were up 10% in their last earnings, and they also raised their sales guidance to around 4%. That's an awesome sight to see when so many companies are slashing their sales targets left and right. The company has paid dividends every year since 1890. To put that in perspective, Procter & Gamble has paid dividends longer than Oklahoma has been a state. Yeah, sooner or later, you will definitely start to realize that all those dividend increases, that will add up. Their recent 5% dividend increase was actually the 66th straight year they've not only paid dividends, but they've also increased what they've given shareholders as well. Now, is this a stock that's gonna make an investor a millionaire overnight? Probably not. But it is a very mature company. It has slow growth, but over time, it will pay off. Especially in times like this, it's nice to have a stock that you don't need to be worried about. I currently own 7.37 shares of Procter & Gamble and make $27 in dividends every year. This is the first time I've bought P&G in over a year, but you can see I've been a patient shareholder since 2018 and have gotten some fantastic returns, over 88%. That beats the negative returns a lot of these SPACs and other hot stocks people are pumping have returned. Stock number 2, yeah, I can't believe it either, Pfizer. Pfizer is another mega cap company at nearly $300 billion. Pfizer, of course, is the big pharmaceutical company developing, designing, and manufacturing prescription medications. Pfizer brought in $81 billion in revenue last year, which is quite interesting because each of the 3 years prior to that, they were bringing in $40 billion flat. I, for the life of me, can't figure out how an established company like this could suddenly double its profits so quickly. I'm sure whatever it was a once in a every 100 years opportunity. Now, Pfizer still has an impressive outlook for the future. They are heavily involved in other products for treatments that I'm not even gonna attempt to pronounce because it just sounds like somebody smashed a bunch of letters on a keyboard together. This includes solutions for blood thinners, breast cancer, pneumonia, arthritis. The company also has an impressive pipeline of products for the future, going through phase 3 trials and awaiting that final approval. Now, Pfizer products reached just under 500 million people this past quarter. That's just incredible, the outreach this company has. With all the extra cash Pfizer has earned in the past year, the company is able to acquire other companies such as Biohaven and its migraine treatments, including the #1 prescribed treatment for migraines. Pfizer also has a pending deal to acquire Reviral, which could bring upwards of $25 billion in revenue revenues to the company portfolio by 2030. This is big pharma, guys. You have to constantly be innovating or acquiring new companies. Otherwise, you're definitely gonna lose out on market share and you're gonna lose that patent protection real quick. Pfizer certainly seems to be setting itself up for continued success with its pipeline and acquisitions. Now, Pfizer has paid a dividend for 334 straight quarters. That's 84 years of getting paid every single quarter. Despite a strong starting yield of 3%, Pfizer's payout ratio is only a very healthy 30%. I'm now up to 15 shares of Pfizer. This is my first time buying them in over 2 years, and Pfizer surprisingly has been one of the better performing stocks in my portfolio. Some of my shares are now up over 70%, and I'm earning $24 every year for just owning them. Stock number 3, I already covered it last week, Microsoft. So I'm not gonna linger on this one for too long. I just wanted to show that I had bought more Microsoft stock. This is a fantastic stock that has made so many millionaires. They bring in close to $200 billion in revenues from cloud computing, software, gaming, LinkedIn, Microsoft Office, Bing. Okay, just kidding. The only time people use Bing is when they accidentally realize they're not using Google. Now, Microsoft, along with a bunch of other companies this past week, they actually just lowered their growth estimates. Now, this wasn't anything bad that Microsoft did. It's because the US dollar has actually reached a new 20-year high, as more and more people are now confident in the Federal Reserve in their attempts to bring down inflation. While this might be good news for people living in the US, Microsoft, of course, does a lot of business abroad, and that's not done in the US dollar, where they would get unfavorable foreign exchange rates. So they actually cut their revenue by about $460 million, and they now only anticipate growth of around 13%. I always laugh when stocks go down over short-term news like this. This doesn't impact the fundamentals of the business. I see this as a great buying opportunity. I'm now up to 15 shares and $37.27 in dividends. Stock number 4, the monthly dividend company. Oh, Realty Income. Everyone loves this popular dividend company that invests in the real estate of over 11,000 commercial properties across 70 different industries. Their top clients being Walgreens, 7-Eleven, Dollar General, LA Fitness, Walmart, and so many other recognizable brands. All these are pretty much essential businesses that always get a lot of foot traffic. Every month, they're paying Realty Income rent checks to use their facilities. That monthly cash flow then rolls out to us, the investors. Now, they've paid 622 consecutive monthly dividends and have raised that dividend for 98 straight quarters. Their occupancy rate this past quarter was actually 98.6, and throughout their history, even during C19, it's always been in the high 90s, and this just shows how strong their tenants are that they have renting from them. This is also a growing business, as when we look at O's property growth throughout the years, it went from around 7,000 to 11,000 properties this past year because of a large acquisition that went through. They've also grown their adjusted funds from operations by 5.1% annually since 1996. This company has been operating for 53 years, and it just really shows that they can be trusted as the 5th largest global REIT in the world. Of course, everybody knows this company for those monthly dividend checks. They currently have a starting yield of somewhere around 4.5%. I now own 29.81 shares of Realty, not Reality Income, worth over $2,000 in equity, and I'm making $88.35. I'm almost at $100 in passive income with this stock. I might have to work just a little harder to buy a few more shares so I can crack that $100 in dividends milestone with Realty Income, not Reality. Now again, all of the stocks I mentioned today are swans. They're sleep well at night stocks. No matter how bad the market does, I can rely on these 4 companies to do well and pay me that passive income. Let me know what stocks you're buying in the comments below. These videos do take a lot of time for me to research and edit and put together, so make sure you've hit that like button for the algorithm and are subscribed for more weekly videos. My videos are always found in podcast form under the Collect Cash podcast name, and I will buy, stash, and collect cash you later.